All right, what's up everybody? This is Scott here again with a new video, and in this one here, I wanted to talk about a few things. Number one, I will touch on the massive rally we saw last week and how this week things might be starting to unwind given that Jerome Powell with the Federal Reserve just made a statement today where he's getting a lot more hawkish, or basically favoring a much more rapid increase in interest rates. So we'll talk about that. And then also energy prices, mostly with oil, those prices are starting to rapidly increase once more. So basically the same kind of bearish environment that was pretty much ignored last week is beginning to reemerge itself this week. And then also in this video, I'll give you an update as to the few new trades I've made in the past few days, although unfortunately I was not able to record them. So again, in this video also, I'll give you a general portfolio update. But before I do so, as always, in case you are brand new to the channel, again, my name is Scott, and I just want to let you know that you can also find me on SKILLSHARE as well, where you can take my very in-depth classes on options trading or stock market investing. And I provided some links to some of the introductory courses of mine in the description of this video below. So be sure to check them out, and when you sign up for SKILLSHARE using any of those links, you'll get a full 1-month free trial. Okay, so first off here, let's come over to this Yahoo Finance page, and as you can see with the headline, stocks today, which is Monday, March 21st, ended lower after a hawkish Fed remark. And again, hawkish means the Fed is favoring a more rapid increase of interest rates to combat inflation. And so the main thing that Jerome Powell, the chairman of the Federal Reserve, said today, which spooked the markets, is right here. So as you can see, Jerome Powell said the Fed would adjust policy as needed, specifically its policy regarding interest rates, to bring down inflation, including potentially speeding up interest rate hikes if necessary. So that is one set of bad news for the market. And then also, as you can see right here, or oops, actually right there, also today, energy and commodity prices spiked by a huge amount amid the latest developments in Russia's war in the Ukraine. And this, like I mentioned earlier, is another aspect of the general bearish environment that we find ourselves in right now. And so if we come back to thinkorswim, let's first take a look at TLT. This is an ETF that tracks the 20-year Treasury bonds, and it's basically a great way to get a measure of where interest rates are right now. Because the way this works here is as TLT, or as the prices of bonds move lower, as you can see clearly here, that means interest rates are rising. It's basically an inverse relationship. And ever since the beginning of this year of 2022, and also a bit at the tail end of 2021, interest rates have been steadily climbing. And therefore bond prices have been steadily moving lower. And now if we change the time frame on this chart, let's go to a max weekly chart. And then if we zoom in to this area right here, at this point right now with TLT, right around 130 bucks per share, we are basically back to where we were all the way back in 2019, mid-2019. And clearly, as you can see just from this current time frame, which is about the past 5 or 6 years or so, there is definitely a lot more room to the downside for TLT to potentially fall. So basically the bottom line here is by no means do I think the rise in interest rates is anywhere close to being over yet. And therefore I do think if interest rates do continue to rise and bond prices continue to fall, that's going to add to the overall bearish sentiment that we're seeing right now in the market. So definitely keep that in mind. And then also in regards to energy prices, let's go back to a 1-year, 1-day chart. And then we'll take a look at Ford/CL. These are the crude oil futures contracts. And like I mentioned, it's mostly to do with the price of oil that's causing energy prices to increase rapidly. And we already saw this happen to a significant degree not too long ago. And during this time, the market was selling off pretty significantly, right? Rapidly increasing energy prices is a major bearish influence on the market. And so then naturally, once oil prices came back down and things kind of cooled off, if we now come back to QQQ, for example, this is an ETF that tracks the NASDAQ. This is likely one of the reasons why we saw a massive rally last week. Right, again, energy prices were cooling off rather substantially, and also the Fed had only recently increased interest rates by 25 basis points, a very, very small amount, and that was expected to be the norm for the rest of this year. Basically, every couple of months, Jerome Powell would increase that interest rate by only a few points, and that would be it. So bottom line, what I would definitely hope to see at this point, given that I am a pretty big bear on this market, is I would love to see a major reversal from this point. And also take note that the market reached this major resistance point last Friday. And on Friday, it could not get above it. And today it definitely tried, but again, it still failed. So I'm definitely keeping a very close eye on this price point, basically right around 352 bucks per share on QQQ. There's nothing I would love to see more than for the market to turn around basically right at this point. Okay, so those were the general updates I wanted to give you about this current market environment. So finally in this video, I do want to give you some updates as to the new trades I've been making. So it was mostly late last week during this massive rally where I was placing a few short naked call option trades to play stocks to the downside. And ideally, I was really hoping for a reversal right around this point, call it $340 per share, because at the time this also was a major resistance point, but unfortunately the bulls were just too strong and the market pushed right on through. And so first up here, we'll go to EXPE. This is Expedia Group, which is involved in the travel industry. And for this position here, I sold a naked call option, like I said, with a 200 strike. And ideally, I was hoping that right around this level, call it $190 per share, I was hoping that this would be a major resistance point, because as you can see many times in the past, EXP tried to get above that point, but it failed every time. So once the stock yet again got up to that price point, it was at that time, I think on this day right here, where I sold that option. And so unfortunately, Expedia has pushed a little bit higher beyond that point, but so far it has definitely stalled out a bit. So that's a good thing. And perhaps now we are starting to begin a more gradual reversal in the stock. So I'll just have to be patient and see what happens. Next up, I also sold a call option on CRWD. This is Crowdstrike Holdings. It's a tech company involved in the cloud computing space. And for this trade here, I'll go ahead and zoom in. Similar fashion, I noted this pretty major resistance point right around $205 per share. And so far, this stock is definitely dancing a bit with this price point, but today at least, Crowdstrike did finish below it at around $204 per share. So I have not been at least yet too wrong on this trade. And for this trade, I forgot to mention, I did sell a call option with a 220 strike. So still give myself plenty of buffer in case I am wrong. And in that case, Crowdstrike can still increase in price by a full $16 or so, and I would still be totally fine on this trade here. Now also, if we come over to the monitor tab very quick, as you can see, I did make a few trades today. One of which, as you can see here, was a closing trade on one of my naked call positions that I placed last Friday. And this one here was in SE, which is C Limited. It's a company, I believe, in Singapore involved in online gaming. So briefly for this trade, we'll come to the charts and go to SE. And this one here was definitely very spot on. So again, as you can see there in white, a very major resistance level, which formerly was acting as a support level. And my bet on this trade was that if SE got back up to this point, especially very quickly and rapidly, which it did, then it would most likely reverse off that point. And today, the stock finished down by about $8 or around 7%, and that was all that I needed. So initially, if I come back to the monitor tab, initially I sold this call option with a 135 strike for a starting credit of $510. So therefore, if I bought it back today for a debit of only $255, that makes for a profit of exactly $255. Very nice. And then next up, I did place a brand new trade today in AA. This is Alcoa, which is involved in the production of aluminum. And this once again was a short naked call option with a 100 strike. So once more, we'll come to the charts and go to AA. And then we'll go ahead and zoom in a bit. And so as you can see here in the recent past, Alcoa got up to a price of around $92 per share, and then it fell pretty hard after that point. And now once again, we've had 1, 2, 3, 4, 5 massive up days in a row, and this stock pushed all the way back right to that price point once more. So given the speed at which this stock has recovered, and then again also because of the fact that this price point did act as a major resistance point in the past, that's why I placed this trade and sold a call option with a 100 strike all the way up here. So I definitely wanted to give myself some nice cushion on this trade in case I'm wrong. And even though perhaps over the longer term, we might see metals like aluminum, gold, silver, copper, etc. continue to increase in price, given the inflationary environment that we're in right now, I still think perhaps with Alcoa here, it might be due for a short-term correction. So basically, if this stock can simply fall by a few bucks, perhaps, that's all I would need to take profits on this trade and then move on. And then finally in this video, if we come back to the monitor tab, and as you can see here, I do have quite a few trades today in UAL, which is United Airlines. And these are all stock buying or selling orders. And that's because with this position, if we come to the trade tab and go to UAL, for this trade, I'm in the April 1st expiration cycle, only 11 days left to go. And I'm short a simple naked call option, or two contracts actually, at the 41 strike. I was also initially short the 29 strike put options as well, but I did buy those back on Friday because they were basically worthless, as you can see still right here. And so with my particular strategy, if I do have a short naked call option on and the stock price goes above my strike, at that point I will purchase the full amount of shares necessary to cover the contracts. So again, if I'm short 2 call options, then if UAL goes above 41, I would buy 200 shares of stock. And then conversely, if UAL falls below 41, I would sell those shares for a small loss and carry on. And so that kind of situation is exactly what played out today. So coming into this week, I was already long 200 shares of UAL, and on this morning, or on the market open this morning, UAL did drop quite a bit, and so I had to sell those 200 shares for a small loss of about $90 or so. And then as you can see here a bit later today, this stock did recover back above 41. And so once more, I had to buy 200 shares, and my full price was about $41.45. And then finally, UAL did fall back below 41 once again, and I sold those shares for a small loss at around $41 per share exactly. So that would also be a loss of about $90. And therefore, if you bring up the calculator real quick, let's go ahead and take a look at the current state of this overall position. And so my starting credit on this trade was $340. And I am going to do some rough estimations here, but again, if I lost about $90 on the open of today's market, I subtract 90 from my starting credit, and that brings me back down to $250. And then if I lost another $90 later today, once more, I subtract 90, and that means I still have a net remaining credit on this trade of $160, or roughly somewhere around that. And so at this point, I still don't see a reason yet to make an adjustment on this trade, because if in the next 11 days UAL stays below my 41 call strike, then I'll still make $160 by the expiration date. And that's pretty much right around my initial profit target to begin with. But that being said, if this kind of thing continues to happen, where UAL continues to bounce through my call strike and I lose more money as a result, then at some point I will have to make an adjustment to take in additional credit. And the way I would do that is to once again sell some put options, probably pretty close to the current stock price, and therefore I would collect a lot more additional credit. So we'll just have to wait and see what happens with this trade here. But again, as I showed you with the QQQ chart, I do think perhaps stocks are poised to move lower over the course of this week, although certainly I could be wrong with that. But if that does play out, chances are UAL will continue to move down along with the broader market, and that way I would not have to do anything with this trade. Right, because again, at the moment, I'm only short naked call options, so if UAL does move lower, it can go as low as it wants, and it does not matter. There's no put options for me to defend. It simply would actually make for a profit on the trade by the expiration date. And so with that being said, that's going to do it for this video. I hope you enjoyed it, and please let me know your thoughts or if you have questions in the comment section below. And don't forget, if you want to take some very in-depth classes on options trading or stock market investing, then check out my SKILLSHARE courses. Links in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week, and you don't want to miss out. So thanks again for watching, and I'll see you next time.